Gold just lost $2.5 trillion in market cap in just 38 hours. That's the same value as Bitcoin and Ethereum combined. While everyone celebrates gold's decade-long run, I'm watching something nobody's talking about. The Ethereum to gold ratio is sitting at a critical level that could trigger the alt-season rotation we've all been waiting for. Ethereum is my biggest position right now, and I'm going to show you exactly why the next few weeks could change everything. Let's break down this chart. Let me start with the foundation. Ethereum isn't just another coin, it's the infrastructure layer of crypto. If you add up Ethereum along with all its Layer 2 solutions, you end up with a total of $500 billion in value locked. That's double the rest of crypto combined, including Solana, Tron, and BNB. The network effect is real. Right now, liquidity across all rollups is shared by everyone building on Ethereum. Developers know this. Ethereum leads in both builder interest and monthly open-source developers. This matters because developers build where opportunity lives, and Ethereum remains the top choice for serious projects. Now here's where it gets interesting. I'm trading the Ethereum to gold ratio on the weekly time frame, and this chart is telling a story most people are missing. We've got two descending trend lines here. The first one was established back in August 2022 and broke to the upside in November 2023. That breakout sparked a 135% rally for Ethereum against gold, lasting until March 2024. Now look at the second trend line, formed at the May 2024 Ethereum high. Price rejected it twice, once in December 2024 and recently in August. Right now we're sitting around 0.9, just below that trend line. But here's the setup. Below this second descending trend line, an inverted head and shoulders pattern has formed. Head at the bottom, left shoulder, right shoulder, all clearly defined. If this pattern plays out and we break above that trend line, we could see another 135% move, just like last time. The Heikinashi RSI indicator is deep in bearish territory, oversold, printing its 9th consecutive red candle. Historically, this kind of exhaustion precedes reversals. Volume profile shows the point of control around 0.9, and we're sitting right there now. This is the level where most trading activity has occurred, meaning it's a critical decision point. When price hovers at the point of control after being oversold, it typically signals accumulation before a major move. If buyers defend this level and we start closing weekly candles above it, that's my confirmation that momentum is shifting and the breakout could be imminent. Let's talk about what's happening with gold. Over the last decade, Ethereum outperformed Bitcoin by more than 10 times and gold by more than 1,500 times. That's not even close. Gold is having its moment right now, sure. But remember, assets that defend wealth are different from assets that build it. Innovation compounds faster than preservation. Gold just crashed 8% in 38 hours, wiping out over $2.5 trillion in market cap. That's the largest two-day drop since 2013. Meanwhile, quantitative tightening is finally ending. 2 more rate cuts are lined up for 2025. When rates drop, risk assets rally. Crypto leverage just got flushed out completely. These conditions don't happen at cycle tops. They happen right before the real move begins. Here's something else. There's now $2.7 billion worth of tokenized gold sitting on Ethereum. That supply has doubled since the start of this year. Think about what that means. Traditional investors are bringing gold onto Ethereum's network because they want the efficiency, transparency, and composability that only blockchain offers. Even Bitcoin is being wrapped on Ethereum. At some point, the market will realize Ethereum is a $100,000 asset, trading around $4,000, with lower inflation than Bitcoin. This is the real asset layer, and it's undervalued. So here's where we are. Gold is crashing. Leverage in crypto is wiped out. The Ethereum to gold ratio is sitting at a multi-year support level, with a textbook inverted head and shoulders pattern forming right below a descending trend line that's been tested twice. If price breaks above that trend line, we could see a big fat rally against gold, just like the last breakout. Even if price breaks down through the right shoulder and keeps falling, the setup remains valid. Once that trend line breaks to the upside, Ethereum could deliver massive gains. Again, Ethereum is my biggest position, and I'm watching it closely. If you found value in this breakdown, hit that like button and subscribe so you don't miss the next move. Join my free Telegram group for daily and faster updates. Link is in the pinned comment. And if you want to dive deeper into alt-season opportunities, check out my previous video and my Tau analysis, both linked on screen right now. Never financial advice. See you tomorrow in the next one.